Welcome to another episode of Real Estate Investing Explained. Here's today's question. So we talk about how people couldn't prepare for this or know that it was coming and they shouldn't beat themselves up about it. I agree with that. But how about having adequate reserves? Are those the types of things that people should be doing? Should they have enough reserves set aside so that when things go wrong, not necessarily the coronavirus, but just vacancies or things like that pop up, that they're able to cover it?
You've hit the nail on the head. Today, we are sending out 12 updates for 12 of our properties. And I can tell you that we are leading with the fact that we have a lot of reserves. We're leading with that fact because we're telling here's words that I wrote earlier today for our investor updates. And we said, dear investor, please understand that for most of our properties, we have so much money in reserve that we don't get any rents at all for 6 months, and we still pay our mortgage without getting a loan deferment or defeasance, which now at this point, banks have offered loan deferment on all of our value-add properties. They've already said, if you need that option, it's there for you because that's now a federally mandated requirement. But even if we don't take that, we have the ability to run our properties for 6+ months without getting rent. And that puts my investors into a very good situation that they're not worried about their properties. They're not worried about their investment. And so, it shows the strength of real estate. It shows the comparison between real estate and the stock market, because if you'd invest in the stock market, your stocks are now down 35 to 40% since last month. Where in real estate, nothing's really changed on properties that have already been purchased and are already occupied. Why would anything change? We're just going to hold through however long this process is. And we'll probably won't distribute cash to you for Q3 and probably won't distribute for cash for Q2 and Q3 and maybe not even for Q4. That's a very tiny thing compared to losing 30 or 40% of your principal. We're just talking about losing a portion of cash flow for a portion of 1 year. That's an extremely small amount of pain compared to losing 40% of your principal.
I don't have a portfolio with hundreds of units in it. I don't have large apartment buildings, but my small portfolio, I do the same thing. I keep a large reserve balance. I personally don't take any cash out of the business. I always just keep the money there. And then eventually one day it'll come out, but I just keep the reserves. And we have 9 months of reserves in there. So if we end up not getting any rent over the next 6 months, we'll be fine. Even 9 months will be okay. And so I didn't know that this event was coming. Nobody knows, but setting yourself up by running a strong, healthy business is going to help you weather things like this.
And also, I think that you need to have both offensive and defensive tactics. So our investors know that we're assessing our community's health regularly. In fact, we're doing it daily today. We're providing special resident services. We're telling them exactly where they can get information, what they should be doing in case they're infected. We're evaluating those at-risk tenants to see how that affects our communities. So these are all offensive tactics. We're spending a lot more money on leasing. We're doing online leasing initiatives. We're showing our units virtually. And then we're dealing with the delinquencies on an aggressive basis. And then there's defensive tactics, right? So we're limiting the interactions in our community. So parks are shut down, the clubhouse is shut down, the coffee and the donuts and the cookies are no longer laid out. Our leasing office is closed. People are working from home. Our maintenance staff is only doing the sort of things that are emergency. If they were going to come and change out the battery in your smoke sensor, smoke alarm, they're now leaving it outside the door so that they're not infected. And then properties that we don't have to do unit turns, we've stopped doing unit turns. We're preserving that capital so we can use it later. And then also we've talked with our lenders already and we've said, hey, we might need deferment. And they're like, okay, if you need deferment, here's all the forms. Once you do that, then you stop hyperventilating. You said, you know what? I've done 50 or 60 different things and I'm not in such a bad position. Now I'm just going to sit and watch to see what happens.
That's all for this episode of Real Estate Investing Explained. Be sure to follow me on Instagram, Twitter, and Facebook, or subscribe to our YouTube channel to get even more free content.